Fusion Mobile, quality e-learning experience on the go.
You are welcome to Fusion Mobile e-learning platform. I'm Olokobi Pelumi by name, the accounting tutor, and in this class we'll be treating interpretation of accounting ratios, interpretation of accounts using simple ratio. So we'll be looking at the meaning of ratio and accounting ratio. We'll be looking at the classification of ratio, and we're going to take some illustrative questions. So the meaning of ratio, we've done that already on accounting ratios, simple ratios. This is an advanced level of what? Ratios. So this with interpretations. So meaning of accounting ratio, as stated earlier in our previous class, we said ratio is the relationship between what? Two or more figures. So we use it to show some relation between two or more figures. That is the major function of ratio. Then when talking about accounting ratios are ratios which are used in the interpretation of financial statements. So they are used to analyze all of the figures of the financial statement. So that is one of the usefulness of accounting ratios. Then classification of ratio. Generally on your level, ratios are classified into three categories. We have the profitability ratio. Two, we have liquidity ratio. And three, we have the investment ratio. So we're going to take them one after the other. Profitability ratio. This I've explained itself. Profitability ratio. This ratio is used to make sure the extent of profits of the organization within a particular period of time. So we can use the ratio to compare the performances of the organization. Is the organization improving or not? Or is the organization worsening? So that's what we talk about. Profitability ratio is used to measure the profit of the organization over a given period of time. So we have different type of profitability ratios. There are different forms of ratios that fall under the profitability ratio. Again, we have the liquidity ratio. The liquidity ratio shows the short-term obligation of the business. That is, will the business be able to meet its short-term obligation within a period of time? That is what the liquidity ratio shows. So it shows the ability of the organization to meet the short-term obligation. So we can then have the investment ratio. Investment ratio. This type of ratio is an interesting one, and is usually used by the investors. It is usually used by the investor to analyze the financial statement of a particular period, and it enables the investors to make decision whether to invest in an organization or whether not to invest in an organization. This is usually used by the outsider, that is the investor, potential investor in the organization. So they use this in analyzing the financial statement of the business. Is this business okay or not? Can we invest in such a business or not? So that is what the investment ratio is all about. So we will be looking at different type of ratios that fall under this classification. First thing, we are going to take the profitability ratio. We are going to look at different type of ratios that fall under it. Profitability ratio. What category of ratio falls under the profitability ratio? We are going to look at that. Number one, A. Let's call that A. We have the gross profit percentage. Gross profit percentage. So we explained this before, that the gross profit percentage is usually expressed as the what? As the percentage of sales. So that shows the gross profit expressed as a percentage of sales within a period. So we also have net profit percentage. So the net profit percentage expresses the net profit as a percentage of what? Sales. So C, we have the return on capital employed. This one will be. So we have the gross profit percentage. That will give us the gross profit over the sales times 100 over 1. Now the next thing, we have net profit percentage, as earlier explained. We have the net profit over sales times 100 over 1. Now return on capital employed. So that is give us the what? Return on all of capital of the proprietor employed. So return on capital employed is the profit of the business over capital employed. So equals to this. Now we can have it equal to here. Capital employed times 100 over 1, which is our return on capital employed. Now the next thing we have liquidity ratio. Okay. Interesting. So we have the liquidity ratio, which is the second one. The liquidity ratio, we have A. Now the ratio that shows the short-term obligation of the organization. We have A. We have current ratio or the working capital ratio. Working capital ratio, and that will give us the current assets over the current liabilities within the period. So B, the B is the what? The B, we can call that acid test ratio, or acid test ratio, or liquid ratio. So the acid test ratio is the current asset minus stock over current liabilities. So the next thing is C, which is the debtors ratio. And that gives us debtors, the balance of debtors over credit sales within the period, times 100 over 1. Now we also have the creditors ratio on that. That will give us creditor over credit purchase times 100 over 1, which is D. So creditor ratio Okay, we have credit over credit purchase times 100 over 1. So we can have the next ratio, which is the investment ratio. The investment ratio C3 investment ratio. The first thing, let's look at A, earning per shares. Then the ratio used by what? By the potential investor to analyze the what? Financial statement of the organization. This will give us profits after tax over ordinary shares. That is number of ordinary shares in the period. So B is the price earning, that is give us this give us earning per share, that is what earning with each number of shares have on the profits of the organization. So that will give us the profit after tax over the number of ordinary shares. That's our explaining itself. This will give us earning per shares, price earning ratio rather. In the price earning ratio, you have the market price of shares, over the earning per share. So this gives us the ratio of market price of the shares over the earning per share. Now we have the dividend yield. That will be dividend per shares and dividend offers per each share over the dividend per share over the market price of shares. So the next one is the dividend cover. So we have the dividend cover. So the dividend cover is the earning per share over the dividend per share. So that shows how much of dividend you'll be able to cover the earning of the organization. So you can move to some illustration question now. So we have an illustration. The following balances were extracted from the book of Danladi Limited on June 30th, 1995. Ordinary share capital 150,000 naira, retained profits 28,383. We have 6% debentures 45,000 naira. We have premium on ordinary share 37,500. Then we have freehold premises at cost 127,500. We have plant and machinery 105,900. We have provision for depreciation of plant and machinery. We have 38,100. Same thing, we have stock 48,219. We have debtors 31,644. We have bank and cash 22,890. We have sundry creditors. We have accrued rent. So you are required to prepare the balance sheet as at 30th June 1995 and calculate the following current ratio: working capital, liquid assets, ordinary shareholders fund, asset test ratio. Interesting. Okay, we have to prepare the balance sheet, which is a balance sheet as at 30th June 1995. So we can have it as T format. We have fixed assets. So we have the fixed assets. We have freehold premises. We have plant and machinery. Okay, I think that is all. So freehold premises. We have 127,500. So we have plant and machinery. So which is 105,900. So less depreciation. So less depreciation on plant and machinery, we have 38,100. So we can easily less depreciation 105,900 minus 38,100. Then we have 67,800. So do we have any other fixed assets? No. Okay, we can add plus 127,500 Then we have 195, 300. Now we can have our current assets. So we have stock, we have debtor, we have cash and bank. Okay. What again do we have? Okay. We have stock, we have debtors, we have bank and cash. So stock is 48,219. We have debtors 31,644. So we have cash and bank 22,819. So the addition of everything, we have 48,219 plus 31,644 plus 22,890. This is where I am. That gives us 102,753. So the next thing is, okay, we have ordinary share capital. Share capital. We have 150,000 naira. So we have retained profits. We have premium on ordinary shares. So we call that reserves. So this, do not forget, premium on shares is reserve. When we did reserve and provision, premium on ordinary shares. We have premium on ordinary shares, 37,500. The next thing we have retained profits. That's about a reserve too, since it's not available for dividend, for deposition as dividend. Since it's not available for distribution as dividends, so it's reserve. We have 37,500 plus 28,383. So we have 65,883. 65,883. So it must be by the side. If they will see it, it must be by the side. Just leave it. They will see it. It must always be by the side. Say, you know, the addition of this give me this, so it should be by the side. They will understand. There's nothing I can do. I want. We should just leave it that way. Okay. Okay, we take premium on shares is 37,500. We have retained profits, which is 28,383. So we can add everything together. The share capital 150,000 plus 3750 and 28383. You have 215,883. So that will be shareholders fund. Shareholders fund. Now the next thing we have 6% debentures as liabilities. Long-term liability. So we have debentures. 6% debentures. We have 45,000 naira. So we have current liabilities. We have current liabilities. We have sundry creditors. Thereafter, we have our accrued rents. So we have 34,730. Thereafter, we have 2,440. Then we can add that. We have 34,730 plus 2,440. Then we have 37,170. So we can then add that to give us our balance. We can add that to give us the balance. So addition of everything here is 215,883 plus 45,000 naira plus 37,170. That gives us 298,053. While also 195,000 plus 102,753. 298,053. So that's the balance account. Now the next thing is A, balance sheet has been done. B, BI is to calculate the current ratio. Current ratio. So the current ratio is the current asset over the current liability. So we have current asset is actually 102,753. Total of the current asset over the current liability is 37,170. Now they give us 102,753 divided by 37,170. I'll give us 2.76 over 1. Ratio 1. That is the current ratio. So you divide this by this and divide this by this. Dividing by this, that will give us 2.76. That will be 0.1. Ratio 1. So that is the correct way of writing ratio. 2. Working capital. So the working capital is the current asset minus current liability. So working capital again is current asset minus current liability. So the current asset is 102,753 minus 37,170. So we have 102,753 minus 37,170. So we have 65,583. 65,583. Then BII. So we have liquid capital. Sorry, liquid assets. Liquid asset. The liquid asset is equal to the current asset. So the liquid asset is equal to the what? Current asset. So liquid asset is the same as the current asset. That equals to 102,753. So BIV, we have BIV, ordinary shares fund, ordinary shareholders fund. So the ordinary shareholders fund is equals to the share capital plus the reserves So ordinary shareholders fund now. So where do you want to stand? There's no way I will stand and be writing. I'm looking at something there. This is where I'm looking. Maybe this is the current place I am. They will be seeing it now. They're not seeing it. This is the current place I am. I'm trying to bend for them to see already. They will see it. And once I move, they will follow me. Don't worry, they will see it. There's no way I want to move. So shareholders fund, we have share capital.
Sorry, if you stay on this side, can't you see?
How will I be able to write? So don't worry, they will see it. So shareholders fund, I'm already moving. Shareholders fund, we have the capital, share capital. Is the share capital 150,000. Then plus reserves, we have premium on ordinary shares. Premium on ordinary shares is 37,580. Then plus retained profit is 28,383. And now they give us capital already 215,883. So V is the acid test ratio. Acid test ratio, which is equals to current assets minus stock over current liabilities. Now the current asset is 102,753 minus the stock is 48,219 over current liabilities is 37,170. So we therefore have 102,753 minus 48,219. So we have 54,534 over 37,170. Therefore we have 170. So we have 1.47 ratio 1. So we divide them 1.7 ratio 1. So I think that is all about ratio, an interesting topic. So we are able to prepare the balance sheet. We are given question and we are asked to prepare the balance sheet. We are able to prepare. So we are able to prepare the balance sheet within a period. So we have the fixed assets, then we have the current assets, and also we have the share capital and the reserves. We also have the long-term liabilities, 60% debentures. We have the current liabilities. We have the creditors. We have the accrued rents. Thereafter we have to calculate the current ratio, which is the current assets over current liabilities. We've done that. Working capital, which is the current assets minus current liabilities. And also we have the liquid assets, which is equal to the current assets. Next one, we have the shareholders fund, which is the share capital plus reserves within a period. And also asset test ratio, which is the current assets minus stock over current liability, which we've done. So if you're having any difficulties or confusion about the topic, do not hesitate to replay the video, and some exercises will be displayed on your screen. Do well to attempt such an exercises. Thank you.